Bitcoin has seen an explosive rally back to $28,000 upon the release that Grayscale beat the SEC in relation to the spot application for an ETF. How high can Bitcoin go? Is this a huge trap for the bulls? And what will be your next move for Bitcoin? Let's jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has seen a gargantuous rally towards 28,000, retesting the 28k daily 50 EMA level, retesting a high time frame level of resistance. This rally was all as a result of Grayscale winning the court battle against the SEC, which now enables them to file a Bitcoin spot ETF if they choose to do so. Bitcoin has seen quite an aggressive rally. In today's video, we're going to be talking about the next move for Bitcoin, what this rally means for the macro charts, and of course, what you should be keeping an eye on moving into the new month. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need, guys, to stay in the loop of cryptocurrency, with Bitcoin, and of course, the relevant economic news. If you are interested in joining our VIP channel, you can go ahead and contact me via the pinned comment in the free channel, or you can contact me via our sale message, which is right over here in that free channel. You can find all membership information here, and of course our detailed trading track record. The VIP group has over 600 members. You can see we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive chart analysis. Not only will you get access to this channel, you'll get access to our group chats, our general chat, our trading education chat, our trade setup chat, our news chat, our daily video chat, and our help chat. Join us over there for more information. Let's go ahead and jump into a video starting on the market data. So how are we looking currently? September is just around the corner. August is down 5.66%. Pretty strong rally, guys, bringing it all the way from negative 11% to negative 5%, really saving Bitcoin for this month. Volume is up 134% to 112 billion, actually relatively low considering the amount of volatility that the market has seen. Likewise, the liquidation sitting at 163 million over here, relatively low considering the large move we saw in the market. Again, a testimony to the fact that volume is so low, volatility is just absolutely so low, meaning there are less traders, there's less money in circulation, it's easy to push these prices aggressively. That is still up 235% for the 24-hour period. Looking at these liquidations, the majority of liquidations did come from those short positions. We did have a little bit of long liquidations coming in now as the market has aggressively pulled back from 28k. And again, a lot of late entrance into these aggressive late long entries will be taking at these key levels of resistance, as retail usually do. Moving on from there, volatility index, we will take a look over here. As we can see, the volatility index on the 30-day is now continuing upwards, which is a good sign. On the 60-day, the volatility index is peaking up a little bit again, a good sign. As we've said, with compressing volatility, when volatility surges, we generally do see a large move, particularly if volatility has been compressing for an extended period of time or falling for an extended period of time, which we now have seen. Let's go ahead and talk about the DXY. The DXY has, of course, retested this high time frame level of support after rejecting from this key level of resistance we were retesting in yesterday's video over here. We said we will be potentially rejecting from here, which could provide some short-term relief for the S&P 500, for the traditional markets, and for Bitcoin, which we did see. We are now retesting a level of support right over here at 103.5. If lost, we could expect a full-blown correction on the DXY back down to 101, which would be very bullish for the traditional markets and for Bitcoin. However, if the DXY continues upwards over here, which again it very well could, because we are by no means out of this uptrend. We are still looking for 105, 106, and this will be very, very bearish for these markets. So we're still in this middle ground place, and the determining factor of where the DXY will be going will be based on the economic news, which is incoming. Of course, on the 13th of September, we have inflation data, which is very, very important. Of course, on the 1st of September, so in 2 days, we have NFP and unemployment data. And of course, tomorrow, we have our PCE and personal spending income data, which is very important in relation to short-term and long-term developments in inflation. Moving to the traditional markets, we can see the S&P 500 has seen a snazzy little bounce from these lows. Again, nothing significant enough to really throw the favor in the bulls. We do need to break above 4,600 here to continue this trend upwards. Until then, we do run the risk of creating a lower high, and that could potentially push the prices back down. Exactly the same thing goes with the Dow Jones, so I'm not going to get into that. Let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. And we need to talk about the short-term price action first, and then talk about the high time frame price action, discuss what caused this rally, the implications of this rally, what it means to the macro charts. Has it changed anything? That's a big one. And more importantly, what we should be expecting moving forward for Bitcoin in terms of future economic news. Now, there is one thing I want to mention before we start this analysis. The next 7 days for Bitcoin, the next couple of days for Bitcoin is going to be considered a high risk environment. The reason so is because we do expect there to be an announcement for Bitwise, BlackRock, VanEck, WisdomTree, and Investco in terms of their rulings from the SEC in regards to their Bitcoin spot applications. If these get delayed, we are going to see a significant and brutal pullback for Bitcoin. If they get denied, we are going to see a significant and brutal pullback for Bitcoin. If they get approved, we will likely see this trend continue aggressively upwards. These macroeconomic events, these major events that shift the shape of the specific asset class we're talking about from a political and societal perspective, more importantly, and even an economic perspective, as more money can come into these asset classes, have massive impacts on the price action itself, okay? These are high impact news events and not something you should be ignoring, okay? And I would highly suggest, as we move closer and closer to the ruling on these events, you manage your risk effectively. As we have seen just in the last 24 hours, how violently the price can move in one direction when these news events come out in favor of the market. Okay, so watch these news events, plan for them, prepare for them. If you don't know how to plan for them or prepare for them, just avoid trading until they are over. If we do see them come out bearish, a massive correction will occur. If they come out bullish, a massive rally will occur. And it's very much impossible to say for sure what's going to happen until we find out what's going to happen. You can't actually predict what their decision is going to be until it is released to the public. Remember, the public get the information last. We get the information last compared to everyone else. We are in a worse position. Generally, the market will move into a position to then force the public into certain directions to manipulate and to capitalize on the public's decision. So keep that in mind, guys, but we'll go ahead and jump into the short-term analysis. So Bitcoin has broken out of this horizontal range. The horizontal range was, of course, a long-standing 12 to 13-day range. We saw a nice strong breakout. We did say in our video, this was a neutral pattern. We said there was a slight advantage towards the downside, but it wasn't anything significant. In fact, we actually saw the breakout to the top side, and upon breakout to the top side, we saw our CVD flip bullish, which was our bullish trigger. We saw open interest rise, and we saw momentum flip bullish again in this overbought territory. This is all signs of significant shift in strength. Upon doing that, we've also broken above our 26,300 major bullish trigger. We've been saying for the last 12 days, if we break above this level, that will result in a move into our next level of resistance, which is right over here. And if we retest that level, we're very likely to continue upwards into our major level of resistance. So if you caught that move, if you're paying attention to the videos, congratulations, you executed and you profited very, very well. The short term right now, however, is starting to look a little bit grim. We're starting to see volatility dry up, we're starting to see momentum dissipate, and we're starting to see volume start to drop down. This is perfectly normal at high time frame levels of resistance. But if you are looking at this right now, this is not the time to be aping into longs. If anything, this is a time to be considering to take shorts. Let's go ahead and take a look at the technicals on the small time frame. As we can see, our CVD has reset and it has fallen all the way down to the 0 point. That is perfectly normal. We have to see what the CVD does as it develops over the next 24 hours. Momentum is falling just a little bit. We did have a small bearish divergence print on this smaller time frame, which would be the 5-minute time frame. We had, of course, rising price action from this peak to this peak, and of course we had decreasing momentum from this peak to this peak. Since then, the price has retraced a little bit, consolidating within the 50 EMA period and of course within this high time frame level of resistance. A loss of these low points right over here, a loss of these low points will trigger the next move toward the downside. We are looking for a full-blown correction of Bitcoin into this next range between 27,000 to 26.8k. If we do push back upwards, we of course do have that 28k level of resistance, which is going to be marked by this this orange line over here, and you can see on the VRPV once more. And of course, if we break above 28k, we have our resistance at 28.25 to 28.4. 28.4 being the major high time frame level of resistance on the chart, which is going to be that major trigger point. We'll go ahead and draw that one out really quickly right over here. This is by far and large the most significant level of horizontal resistance on the chart for the weekly trend. If the price is able to get back above that level, we technically enter a weekly uptrend. It's very important to understand, guys. Right now, we are technically still, even after this aggressive rally, in a weekly downtrend. Remember, the weekly downtrend is below 28.4k. We are in a weekly bearish trend. Above 28.4k, we are in a weekly bullish trend. So right now, even after this explosive rally, we are technically still in a weekly bearish trend, and therefore every single large move upwards into resistance, you should be considering taking shorts or trying to take short-term risk on the downside with very tight stop losses to capitalize on any potential pullback until the high time frame trend flips bullish once more. Moving back to a small time frame chart. If we do see that loss of a low, we are expecting a further breakdown for Bitcoin towards 27,000. If $27,000 is lost, again, we expect a full-blown correction all the way down to retest that upper level of support, which is going to be sitting at 26.3k. So we'll zoom out to our hourly chart to give you a little bit more of a better and clear view of these charts. 1 second. Let's go ahead and delete these indicators. We'll show you one more time over here. If we do reject from this local range low at 27.5, we expect a correction back into this range right over here. If we lose this range, we then expect a correction back to 26.3. If we continue upwards and bounce from here, we are looking for a trigger above 28k for one final move back into 28.4 thousand, where then we expect a liquidity grab and a rejection back down. I find it very unlikely that Bitcoin will continue through this uptrending resistance line if we do not get some positive news on the SEC in regards to those 5 companies filing for the ETFs. If those company ETFs get approved, it is very likely Bitcoin will just blast right through that resistance and continue upwards. If they get denied, it is highly likely this will be a massive, massive fake out before a correction back toward the downside, and everything else remains in play. Remember, when in doubt, zoom out. You have to zoom out on the charts. What are the charts saying on the weekly? Right now, on the daily, on the weekly chart, the charts are still very much bearish, right? We are in a weekly downtrend upon the loss of this high time frame uptrending support. We have broken that level. We are underneath the 28k to 28.4k major horizontal resistance, and therefore the trend is weekly bearish. We have done nothing from this rally besides retest of 50 EMA and seen an aggressive move toward the upside, but this aggressive move toward the upside has not cleared any significant high time frame levels of resistance. It has just filled the gap between our short-term support and our high time frame resistance. It has not cleared new levels. It has not broken upwards. It has not shown significant strength. It has done absolutely nothing. And you have to be realistic and objective. And this isn't me trying to be bearish. This is me being a realist. This is me looking at the charts and the facts and the data and telling you guys what the charts are saying. Until we break above that trigger that turned us from weekly bullish to weekly bearish, we will not be weekly bullish again. We remain weekly bearish. That is not saying the price will not go up. We've just described to you how the price could potentially go up on the short term. What it is saying is resistance until it is not. And if we see a full-blown correction and pullback and retracement of this entire move, you should not be sitting there and not be surprised. And furthermore, I'll go ahead and say this. If you are unsure, just do not trade it. You do not have to trade every single move the market makes. Okay, do not fall into the trap. Your job is not to be in every single move and make $1 every single time the market moves. Your job is to make a net profit over whatever reporting period you're looking at, whether you're a week, a month, a year. The job is to make a net profit, not to jump on every move, not to trade every move. On this channel, we teach you how to do that. We show you how to do that, but it's not your job as a trader. So do not sit there and be like, oh, I'm so upset. I missed this event. I missed this rally. You could never have seen it coming. You would never have known the SEC was going to lose the court battle. You would never have known they were going to release that information to the public at the time they did. It is impossible to say for sure. All you can do is look at the situation now and plan your next move based on the data you have available. Let's go ahead and take a look at the high time frame charts. So the high time frame charts have not yet quite updated. If we take a look at the chart right over here on the weekly, we can see the upper band of the Gaussian channel is sitting at 28.2k. This is going to be a key level of resistance for the weekly chart, and again, a level we do need to break above to start flipping the trend back in favor of the bulls. We definitely want to see this level reclaimed to push the prices back upwards. Again, to break over that level, we need to break above that 28k resistance. We need to break into that 28.4k level. So again, these levels are lining up with key levels of significance. The 28.2k is the upper band of the Gaussian channel, which is going to be a weekly technical flip in strength. Breaking above there will signify a shift in strength on the weekly chart. 28.4k is the structural level of resistance in which the trend will flip if we break above it. So breaking above those two levels, those two key levels of significance, will tell us the weekly strength has been reclaimed, the weekly strength is back, and the prices can continue back upwards to that high time frame level of 32k potential resistance. Okay, keep that in mind. Moving back over to these charts over here, guys, we can see if we get rid of the 50 EMA, if we get rid of the Gaussian channel, we can see we do have the bull market support band. The bull market support band is sitting at a level of 27.5 to 28.2. Again, a key level of resistance that will be retested and potentially rejected from if we do not break above. Breaking back above this level again will signify a shift in high time frame strength. And it is something we are looking for when we're looking for continuations toward the upside. Until then, we are still underneath these key levels. We are still technically bearish. And finally, we are looking for a positive shift in momentum. Again, we're going to be using that same key level, the 62.09 level on the RSI. We'll go ahead and plug that one in, 62.09. Every time we break above the 62.09 level, after completing a correction toward the downside, we end up seeing a rally back upwards. We can go back in time over here and look at every single scenario this has occurred without a single time of failure. Every single time we have broken above this level after correcting from it toward the downside, correction from it toward the downside, rejection, continuation, breakout, we have seen a pretty strong rally upwards, and it generally represents a shift in momentum on the high time frame, and that shift in momentum is again then reflected the price action moving upwards. You can see just in the last 5 instances, every time we've broken upwards, we've ended up seeing a 10+% move upwards. So we're looking for a shift in momentum. We are looking for a break above the 62 point on the RSI and this downtrending level of momentum over here to signify a shift in high time frame momentum, a shift in high time volume, a shift in high time volatility, and a shift in high time frame strength, which could drive the price action higher. So to summarize in today's video, to summarize everything right now, guys, the market has seen a massive rally upwards. The rally upwards was a result of the news event, which was the Grayscale won the court battle against the SEC, which now facilitates them to submit a ETF spot Bitcoin application. This hasn't been approved. This hasn't been completed. It hasn't even been submitted. It just allows them to submit that, okay? The market has rallied massively more than it probably should have on this particular news. This tells us this is a degree of irrational exuberance in the market. It's overly emotional. The retail investors have been driven into this decision by emotion, by FOMO, by this news event, and it hasn't really substantiated anything. The main news event coming out very soon is whether or not these 5 companies ETFs will be approved, delayed, or denied. That is the big one. That is the one we care about. That is the one that's going to actually push the price action on a higher time frame. Until then, which is in a couple days, be cautious of every move. Understand that resistance is resistant until it not. Watch the momentum, watch the volume, watch the volatility, watch the metrics. Don't watch the price action. Watch what the strength of the price action is doing. Right now, we are at resistance. We are starting to exhaust. If we see this as resistance, the probability of rejection and a pullback is likely. Thanks for watching, guys. I hope you had a great time watching the video. And of course, I'll see you guys in the next one on Friday. Thanks for watching. Cheers.